Thank you so much for joining us for this episode of Leading Change. My name is Emma, and I have Curtis with me today, and we're going to be talking about the idea of underwriting profitability. But before I get to all of the questions that I've got for you, Curtis, can you give an introduction?
Yeah, sure. Thanks, Emma. My name's Curtis Goldsborough. I'm the president at National Insurance Inspection Services, and we are a loss control underwriting inspection provider to property and casualty insurance companies. And we're nationwide. We operate in all 50 states. We do complete physical field inspections. We've got a network of independent contractor inspectors around the country completing physical field inspections. And our business is quickly shifting away from that, kind of old school traditional method. And about 6 years ago, we built our own proprietary self-inspection platform. And that is quickly kind of taking the industry by storm. And we're, strategically, and then quite frankly, the industry is demanding it, shifting our business from that kind of traditional model of sending inspectors out to residential properties to inspect, and rather putting the power of an inspector in the hand of a policyholder through a mobile device and allowing them to inspect their own homes. So that's me and what I do.
You also forgot to mention that you are known as the insurance rapper or InsurTech Rapper. And you've become quite the star in its relationship to the idea of the hard market. So for anybody that's not familiar with insurance or insurance terms, or maybe works in a different part of the ecosystem, can you explain what the idea of a hard market is?
Yeah, the hard market in insurance, it's typically what's referred to as a hard market cycle, right? And so over the decades, there are cycles within the insurance industry where, really kind of the definition of a hard market would be a period of time when insurance capacity decreases, insurance losses, claim frequency, claims severity, those all rise. And in response to that, premiums rise, right? The insurance bills that people are paying continue to rise. And, typically a hard market could last anywhere from, 2, 3, 4 years before, it kind of starts to cycle around and capacity increases and, claims kind of tail off and then premiums start to come down, right? So that's kind of it in a nutshell. And there's a lot more nuance to it than that. But at its core, that's a hard market cycle.
So what are we seeing, obviously, with all of the conversation around the idea, we're living in a hard market right now, but how does that specifically relate to that idea that I teased in the intro about underwriting profitability? How does this all come together, and what are we seeing today in the market?
Yeah, in the market today, what we're seeing is just, a significant decline, a very sharp decline in underwriting profitability for insurance carriers. And this can vary, depending on the carrier as well as different lines of business, right? So, on the commercial line side, maybe not quite as severe as we're seeing on personal lines. But again, that can vary to some degree from carrier to carrier. But, for me personally, and where my business is focused on as a solution provider to insurance carriers, specifically in the homeowners line of business, on the property side, it's been a brutal couple years. This current hard market cycle has been brutal for insurance carriers, and they're just looking at kind of year-end results for 2023 that are starting to come out now. A lot of insurance carriers and large tier 1 top 10 carriers really struggling with high loss ratios, as a result of this cycle, and in turn, no underwriting profit, and actually very, very significant underwriting losses. For a lot of them, literally unprecedented underwriting losses, which puts a lot of pressure on them. It puts a lot of pressure on the industry as a whole.
I didn't know that we were going to continue to hear this word unprecedented past the COVID life. But I want to talk to you about then, what solutions do we have, and how do we make our way out of this and start kind of building back to the industry standards that we are more aware of, as opposed to these unprecedented losses?
Yeah, it's a really interesting topic because there are The current hard market cycle, I firmly believe, is different than any one that we've experienced in past decades, because we have a lot of new factors that we've never had to deal with at the same time. So and those are many, and quite frankly, to your point, a lot of those were kind of brought on through COVID, and we're still feeling the impacts of those. But specifically on the homeowner side, the industry is facing some very specific issues that we've not dealt with before. Some of those are related to social inflation, right? And litigation funding, and these types of things we could talk for a long time about individually. But at the end of the day, if a carrier's loss ratio is too high, they can't turn an underwriting profit, and at that point, that line of business is literally just dragging the company down. So specifically on the homeowner side, I'm personally convinced that because of these changing factors, because of inflation, the cost of reconstruction, loss adjusting expenses are going through the roof. Very expensive and hard to get contractors to complete repairs when claims do occur on homes. All of these things are kind of coming together to create this struggle in the current cycle. So from my perspective, I firmly believe that in order to start to reverse these unprecedented underwriting losses, carriers really need to double down on their underwriting practices. And unfortunately, in my world specifically, the inspection practices, the inspection habits of carriers over the last few decades, they just no longer work. They're not nearly as effective as they were in the past. And so carriers need to be innovating in that regard. They need to take a new approach and a different approach. If you do the same old thing, you're always going to get the same old result, right? And those results that carriers were able to achieve in past decades, it's not going to continue into the future. And it's very clear based on the results that we're seeing coming out of 2023.
Well, thank you for joining me for the conversation, Curtis. And for anybody that isn't, make sure you make your way over to his LinkedIn profile and give him a follow. Beyond doing some more serious collaborations like this one, where he's really showcasing his industry knowledge, he's also got the rapper persona, as well as all of his other content where he infuses humor into our industry, which I think is a really important thing. So make sure that you're following Curtis and reach out to either one of us if you have any questions. But thank you again for joining me, Curtis, and thank you everybody for watching, and have a wonderful day. Thank you so much for joining me for this episode of Leading Change. If you liked what you saw, be sure to subscribe and come back weekly for more expert interviews on digital transformation, change management, and emerging technologies.